All right, here we go, everybody. It is Tuesday, October 1st. Yes, we are into the fourth quarter. The fiscal year has ended with over $5 trillion in U.S. federal government spending. That is an all-time record. That is just a mind-blowing figure, but I talked about that the other day. Hey, go back and listen to my video that I made on September 24th. What was that, a week ago, right? I said that we are looking at a market top, a temporary market top based on reserve flows. I said on September 26th. And by the way, that date, September 26th, I mean, I gave that date all the way back in July. I gave it again in August. I said September 26th, we will be hitting a reserve trough. A trough means a low point. And then the rebuilding of reserves in the banking system starts once again, and that is negative. I explained the whole thing. So I gave you these dates months and months before the actual cycles. Same thing with market bottoms when I tell you when the buy window is. If you want to know where the next buy window is, hey, you got to sign up for my report. Go to my website, pitbulleconomics.com. It's right there on the home page. Sign up for a 30-day free trial of MMT Trader. Guys, this is totally tradable stuff. I know a lot of you want short-term profits. You don't like to wait. How long do we have to wait, right? You don't like the macro trades. I'm giving you this stuff, the exact dates of these market swings based on these reserve flows. And I've explained this entire phenomenon many times. I mean, some of you have been asking me questions, good questions, like, hey Mike, reserves are risk-free assets, they don't require capital, they earn money for the banks, which flows to bank capital. That's earnings, retained earnings that accrues as bank capital. So what are you talking about? How can they be negative? I've explained it many times. If you are a subscriber, you get educated in this stuff, all right? Now, I'll just say quickly, there are many ways that banks are assessed as to their financial stability. There are capital requirements. There are a number of regulatory constraints or requirements that the banks have to meet. And one of those is the supplemental leverage ratio, the so-called SLR, and that is Tier 1 capital divided by consolidated assets, of which bank reserves are part of those consolidated assets. That's the denominator in the equation. And when the Fed or when the government suddenly spends a lot of money, like usually on the first of every month when you have Medicare payments, Medicaid payments, veterans benefits, all these once a month major payments, that just gets pumped right into the banking system, and adjustments have to be made. The denominator goes up, that number shrinks, it takes it down closer to the threshold of where that leverage ratio has to be. Maybe for some banks it even brings it below that threshold, so they have to make adjustments. They have to either slow down the accumulation of risk assets like loans, some equities, maybe they have to actually sell some assets, okay? When you see big reserve infusions, like when these central banks stupidly do this QE thinking that they're stimulating, they are not stimulating. So I know based on the calendar, because these flows are very predictable. Now what's not predictable is what we've seen the Fed do most of this year, which when they come out with these totally surprise announcements like, hey, we're going to stop balance sheet reduction right now, even though we told you we were going to do it 2 months later. Or, we're going to start doing these repos now. And not just once a day, but then the next day or 2 days later, they say, now we're doing term repos for 14 days. I mean, all this stuff is completely erratic. It is spontaneous. There is no way to know unless you're inside with these guys what they're going to do. But when they do it, We know how to respond to that. So go back and listen to my September 24th. In fact, I said, is this a market correction is coming? And I explained that the basis for that outlook, the correction, and by the way, we're down 300 points today, were these reserve flows, the reserve trough, that is the low point in the cycle. They build back up again. And if you want to know when the buy window is, you're going to have to sign up for my report, MMT Trade, because it's all in there on a weekly basis. I go over all this stuff on a weekly basis. And by the way, if you don't have money, folks, let's talk about this for a second. People, not having money, not having sufficient income, not having income to spend, not wanting to part with your money, that is a mental game problem. You cannot have growth without exchange. Economics, the economy itself is all about exchange. If you don't have money, if you're afraid to part with $100 or $125 or $250, that is a mental game problem. It's because you do not know how to go out there and get more. The worst thing in the world you can do, or the most ridiculous belief you can have in your head, is you cut to grow. You cannot cut to grow. Okay? You cannot cling on to that money and expect to grow. All right? If you want to plant a tree, if you want to plant anything, you have to fertilize it. You have to give it water. You have to nurture it. In other words, you have to invest into it. You have to put something into it. You cannot cling on to the earth, the dirt, the fertilizer, the nutrients, the water, and expect that thing to grow. Same thing with anything in your life that is associated with growth, whether that's financial growth, whether that's personal growth or physical growth, strength, okay? Emotional growth, having to go through hardship and enduring that and coming out stronger and more resilient as a result of it. Love, get hurt sometimes, okay? That enables you to grow and appreciate when you have the good aspects of all those things. Anyway, I got a little bit off course here. Let me talk a little bit about oil because it is down. Of course, we have not only come back from all the gains that were created with the attack at that Saudi facility, but we have gone, I think, even down below the point where that happened. Now, I'll say this. The trade in the oil market now for a number of days, over a week I would say, maybe 10 days since that attack, really has been based on what's happening with stocks, the sell-off in the stock market. It has been based on fears of an economic slowdown, which I said is not going to happen. It has been based on the strong dollar, which is somewhat of a bubble right now, and it is getting to an extreme overbought point. The bottom line is, what is going to win out at the end of the day is going to be good old-fashioned supply and demand. We have seen a very significant drawdown in crude inventories. We have seen a very significant drop in crude oil imports. We have seen a very significant cutback in OPEC oil production. As a matter of fact, the month of September saw a reduction of 750,000 barrels per day. Hey, remember, what was it, at the beginning of last month in September? When they said, hey, OPEC production was up 50,000 barrels a day. Everybody started to sell like crazy because it was up 50,000 barrels a day, but still within its quota that was defined by the reductions, by the cuts. Now the cut is 750,000 barrels a day. You don't see that anywhere, all right? We have rig counts in North America collapsing. So all of these estimates of U.S. production and North American oil production, they're going to come way, way down. And let's see what the bears do towards the end of the year when inventories are below 400 million barrels, all right? So they're selling right now. And by the way, even in today's sell-off, which was, I think, the 6th day in a row, oil spreads are still inverted on the NYMEX and the Brent spreads. They're still inverted. As a matter of fact, they're a little bit, the NYMEX spreads are a little bit positive today, up, as a matter of fact. So, I mean, at the end of the day, I'm telling you, supply and demand is going to win out over all these hysterical zombies who are selling because they're looking at the dollar or they're looking at stocks. You're going to see. You are going to see. Anyway, I called this September 26th. I said that's when it was going to go happen. You can go back and watch my videos. Watch the video on the 24th, the one that I did on the 24th. Folks, guys, got to go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. I mean, seriously, what are you waiting for? Bye.